The number one misunderstood and misquoted and really just misinformation that goes on in the solar industry comes down to the 30% tax credit and how it affects your homeowner's monthly payments. What I'm going to cover in this video is how the 30% tax credit plays into the final monthly payment that your homeowners are going to be paying, and what you need to do to ensure that you and your business are giving clear instructions to homeowners who are investing in solar. My name is Kody Landals, and I help roofing companies seamlessly add solar to their business, increasing their profits while guaranteeing a 5-star experience for their homeowners from sale to install. On this channel, we go over the common mistakes that many companies make and many sales reps make. And this is number one. I cannot stress how important this is. This is the biggest thing that you need to make sure that your team are trained on in order to not give homeowners a bad experience. So let's get into it. All right. So this 30% tax credit is a federal tax credit. Okay? And what that means, how tax credits work, is they are a credit towards taxes that you pay. So generally how taxes work is you work all year. Let's say you're a W-2 employee. You get paid every single paycheck. Every single paycheck, the federal government takes taxes out. And so let's say they took $20,000 in taxes from you, okay? Then at the end of the year, they go, I am sorry, I should have only taken $14,000, maybe after your deductions, your other credits, etc., which means you would get a check for $6,000, okay? That's your rebate check. Same thing, maybe it's the reverse, maybe they took $10,000 from you, then at the end of the year they say, oh, I should have took $14,000, hey, Kody, you owe me $4,000. But that's generally how taxes work. You pay into them throughout the year, you file your taxes at the end of the year, and then you and the government settle up with either you owing them money or them owing you money. Okay? Now, what a tax credit does is a tax credit is a dollar for dollar exchange for the tax liability. Okay? And let me preface this all by saying I'm not a CPA. This is not tax or financial advice. This is just education on what the vocabulary is around this tax credit and how it works in general cases, okay? So the ITC tax credit is a dollar for dollar tax credit. It is not refundable, meaning that you have to have a tax liability to offset. So how a tax credit works is, let's say you had a $10,000 tax credit in this same scenario. Well, then what's going to happen is the government would say, hey, normally you'd owe me $14,000, but you had a $10,000 tax credit. So now all that you would have owed for the year is $4,000. Okay? Which means we took $20,000, you only owe us $4,000 because you had a $10,000 tax credit, which means at the end of the year, they are now going to give you back $16,000. An extra $10,000 because you had a $10,000 tax credit. But that was only possible because your tax liability was $14,000. So let me give you another scenario. Let's say they only took from you $8,000. And they said, oh, you know what? We should have taken $12,000 from you. That's what you actually owe the federal government based on your income, right? Your taxes are all based on your income, your tax brackets, and then you either have some deductions and credits that then ultimately change this number. But let's say that this was a scenario, you paid $8K, but you really owed $12K. What does that mean? Means you owe the federal government $4,000, right? That means you need to pay the IRS $4,000 when you file your taxes instead of getting money back. Now let's look at this same scenario. You now have a $10,000 tax credit, which would come right here. So now they would say, hey, you owed us $12,000, but you had a $10,000 tax credit, which means you only owe us $2,000, right? So now it's $8,000. They said you only owe us $2,000, which means you now get $6,000 back. This is a change of $10,000 because of this tax credit. But at the end of the day, the homeowner is only getting $6,000 back. They would have had to pay $4,000. So they did see a $10,000 net increase because of this tax credit, but it doesn't mean they are getting a check for $10,000. It just means they're getting a $10,000 tax credit that can manifest in several different ways depending on what their individual tax situation is. Okay, so it's very important to understand that and help that homeowner explain. And that's why we don't do this at the kitchen table. We tell the homeowner, go see a CPA. Go ask a CPA what your tax situation will be, because you're going to get a $10,000 tax credit. We can say that. If that's 30% of the solar price. But we cannot say, are they going to get money back? I don't know. I haven't looked at your taxes. Go consult that CPA. But a general rule of thumb is if they are, if the household income's above $80,000, generally there is some tax liability in there. But again, have them consult their CPA because they might have 6 kids and each kid has a tax credit associated. So it really just all depends on their situation. Please do not act as a CPA or as a tax professional. Have the homeowner consult their tax professional. All right, so that is how the tax credit works. Now let's talk about how the tax credit plays into the monthly payment, okay? Now, how solar loans are structured is the solar loan, they assume that the homeowner is going to get the tax credit and put it back in towards the loan. That's what the tax credit's for. So in this situation, they would get their rebate check at the end of the year of $16,000. They would take the $10,000 and pay it towards the loan. So let's take a look at what this looks like. Let's say you had a $40,000 solar system with a 30% tax credit. That means you'd have a $12,000 tax credit. Okay? The lender is going to do the loan with a monthly payment, assuming that this is going to be the final price, right? Because we have 40,000 minus 12,000, okay? Gives us that 28,000. So what the lender's going to do, the lender's going to say, okay, for the first 18 months, and some of them only do 12 months, but most do 18 months. For the first 18 months, we are going to pretend that your loan is $28,000 at whatever you're financing at, 20-year, whatever the interest rate is. And so a $28,000 loan at this 20-year, 599, whatever the term length and interest is going to be $250 a month. Okay? So for the first 18 months, this homeowner is going to pay $250 a month. Then on month 19, the 19th month, they are going to re-amortize the loan. And what that means is they're going to recalculate the loan. If this homeowner took their $12,000 tax credit and within that 18 months paid it to the lender, it will stay exactly at $250 a month. If they took this tax credit and spent it on something else, or didn't utilize it, whatever reason, if they did not pay that towards the lender, then in the 19th month it's going to go, let's say, maybe to $400 a month. And then it will stay there for the rest of the term length. But you are going to see a big jump. You'll see a 30% jump, because what the lender is anticipating is that you'll take the tax credit that's designed for this solar system, pay it here, and then this will be your new principal. If you do not use that tax credit, or if they didn't pay taxes and they can't take advantage of that, they will revert to this much higher payment, and this will lead to many upset customers because this number probably won't make sense compared to their current electricity bill. So it's extremely important that you make sure these homeowners understand that it's their responsibility to take this tax credit and pay it towards the loan in order to lock in that monthly payment that you guys were originally looking at. And what they need to do is they need to talk to their CPAs, their tax professionals, and ensure that they're going to be able to take advantage of the tax credit, or perhaps it's going to save them $10,000 of what they may owe to the federal government, and that's valuable to them as well. But that's between them and the CPA. We cannot be giving tax advice, and we cannot be guaranteeing that they're going to get this payment unless they understand that they have to take the tax credit and wrap it back into the loan. All right. So if you guys are interested in learning more about this with a simplified breakdown and more training to add solar to your roof business, feel free to text DEMO, DEMO, to 303-222-7133. Myself and Adam Bensman, the roof strategist, have partnered together to create the Roof with Solar Success Formula to help you guys add solar to your business seamlessly. So if you're interested, text DEMO to the number below and we'll get you a free demo.